So, good evening, everyone who's joined us for our special project webinar tonight. Absolutely delighted tonight to be presenting a live project. So, it doesn't get much better when it comes to education and opportunity than an actual live project that's happening right now. It's right in the middle of it. So, delighted to have Shiro and Tom from SATIS Group. How are you guys?
All good,
How's it?
thank you.
All good, thank you. Thanks for having us.
No, absolutely fantastic. Really looking forward to getting into this. To say, I personally, I really like the live projects. I mean, case studies are great, but sometimes a real live project, there's just a different dynamic to it. So let me welcome everyone tonight. If you happen to be watching the recording, whatever time of the day you're watching it, thank you for taking the time. We keep these to around about 30 minutes, so it's designed to be short and sharp. Um, Every question may not be answered tonight, but please do put any questions that you have into the Q&A box, not into the chat box. Put it in the Q&A. That lets us basically record them effectively. We won't mention people's names because it's live currently and there'll be a recording. But if your question doesn't get answered, then we can do a follow-up with an email. That's why it's important to put it into the Q&A for us. And please feel free to make a comment. Feel free to ask a specific question to Shira or Tom, and we'll do our best to get those answered as we go through this evening. So let me just set it up before we hand over to Shira and Tom to really introduce themselves. This project webinar tonight is on behalf of SATIS Group, a group that Prop Funders is working with. I've known Shira for, I'm guessing that must be 6 years.
Yeah.
I've been over there in Manchester, sat down with Tom in the offices, so I've really enjoyed getting to know you guys. And Shira, I guess we connected in terms of sort of recently, back about a month and a half ago when I flew across and we spent the day and you showed me some of your
Yeah.
projects. It's like, wow, there's just some phenomenal things happening with the Saddles Group, and that kind of evolved into to where we are now. So look, just so everyone's very clear, you're going to be showing tonight a project that is around the lease option model, which is quite intriguing. So this is something that is duplicatable, but obviously there's some specific skill sets you probably need to make this happen. So I think it's going to be really good education listening to Sharon and Tom talk through this. On the right hand side, that's actually me outside the very property we're going to be talking about this evening. But Sharon and Tom have kindly offered a site visit to anyone who wants to come along and have a look, and be that just to learn more about this type of model, be that to discuss JV partnership opportunities. That is open on Saturday, 22nd of November, 11 a.m. to 2 p.m. There's the QR code, there's the bit.ly link. Grab it now quickly, and we'll show you again at the end as well. So, look, for there, I'm going to button it for a few seconds and hand over to Shira and Tom, really just to introduce yourselves, and I can just flick through the slides as you want me to.
Yeah, just one thing about the site visit day. One thing I would request those that are coming, if you're coming to Manchester for the first time, you'll know, or you may not know, that we are famous for our rain. So please do bring a brolly. I can't promise some nice weather, David, unfortunately.
I'm used to that in Northern Ireland, don't worry.
Yeah, I was gonna say.
So thank you for that very kind introduction, and thank you very much for the warm welcome. I think what you guys are doing at Prop Funders is fantastic, and I've always been a massive advocate and supporter of everything you're doing, David. So really appreciate the time for us to come on. So as David said, my name's Shira Ronia. I'm one of the co-founders of Satis Group, along with Tom. Um,
Hi, everybody.
who we've actually Tom and I have known each other since we were teenagers in school. So well over, God, trying to work it out now, 20 years nearly. Yeah, over
Give
20
or
years.
take, yeah.
Yeah, so we came together about 5 years ago with both a different but kind of similar path in the property journey, and decided to open Satis Group. And obviously, one of the projects we're going to be talking to, the case studies later on today. One of our kind of when we set up the company, we wanted to have a bit of a strap line that encompasses what we're doing as a business. And we really like buying existing properties, so whether that's commercial or resi, and turning them into something. So that's why we've created this strap line, reviving the past and building the future. But just a quick kind of 30 seconds on me. I started off when I was 18, bought my first buy to let, sorry, which we still own today. Then got into the HMO space. So we did that for about 4 or 5 years whilst I was working for a HMO landlord in Manchester. And then in 2015, did my first development. Fast forward to today, been in the development space for, well, it'll be over a decade now. And Tom?
Yeah, I went through a slightly different route. I straight out of uni went down to London. I worked in the estate agency world for a short period, and then I came back and I worked in PRS or private rented sector for about 5 years. And then I was a development manager for a family office for another 5 or 6 years, where I was focused on resi developments and also managing the existing portfolio. And then obviously just after that, we started SATIS.
Okay. You've mentioned just a high level there, Shiro, but I think it's really important that you maybe just run through,
Yeah, sure.
so bullet points on actual projects that you've delivered, because you obviously are exceptionally, or both of you are exceptionally experienced, but I suppose it's good just to set that scene before we get straight into this lease opportunity.
Sure. So
Yeah,
that property on the top left-hand corner is actually the property I was referring to. So property that we bought when I was 18, 17, 18, and we still own it today. The lady that has been in there actually, David, for 18 and a half years. She started off with one cat and now she's got, I think, five cats now. So or four, something like that. So she's been with us throughout my whole career. I started doing actually some rent to rents before we got into HMOs. You can see there the nice magnolia paint for those on the call that know that that used to be the in kind of thing in terms of decorating a room or a property. Then I was working for a quite a large student landlord in Manchester for about 4 or 5 years. And I always say to people that was my apprenticeship years. And during that time, bought my first HMO in Salford. We managed to build up a decent portfolio in Salford, which we sold in 2016, and then started doing developing. So the second to left photo you can see at the bottom there, the first PD scheme that I did, which was 6 flats in Chorlton, which is a suburb of South Manchester. Tom actually helped me sell some of those properties. So you can see we've known and have been interacting with each other for many, many years. And then kind of did my first multi-unit development, 22 flats with a commercial unit in 2018. And then they
I
said
sold that as well.
the rest. Oh yeah, you sold that actually. Yeah, you did, Tom. Yeah, you're right. You
Yeah, I
sold to
did.
an individual buyer who ended up buying the whole block basically.
Yeah, yeah,
Yeah. Well, I think it's a good idea of a partnership, and one can source and build and one can sell.
Exactly.
That's a good start.
exactly,
Exactly.
Right.
exactly.
Go ahead, Tom.
Um, yeah, as I said, I was down in London at Foxtons for a short period, and then I came back up north to Manchester. So yeah, 2014 was a transaction we were involved in where we purchased that block of apartments in Salford Quays and then traded it out as individual apartments. That there was my first buy to let in 2016 in Salford Quays as well. And the deal next to it was probably a highlight of working for that company at the time, where we purchased a substantial development where a developer had held on to it after the last crash in 2007, 2008. And we came in and bought that at 10 million pounds. It was a big transaction at the time. Whilst I was working there as well, bottom left, I was doing a master's in real estate. So it was a bit of a broad MSc program I did across planning, legals, finance, construction, everything really. And then, yeah, 2018 onwards, I was working for the family office I mentioned, where I was also managing developments and then, so managing current portfolio and then also doing developments. So 2018, that was my first development, which is a PD office to residential scheme, which was well, yeah, developed out and sold it. And then 2019, first mixed use, which is a mix of commercial ground floor and then 4 floors of resi. And then just after that, I finished a new build development, which was 8 new build townhouses in South Manchester, which were all sold. Yeah, so it was a good project.
Excellent. Okay. Well, clearly both of you have got a lot of experience. I think one thing that I liked about when the day I spent with you, the both of you, was that you really focused just on Manchester. You both
Yeah.
you kind of live in
Yeah,
that area. You're not interested anywhere else. You're kind of experts in Manchester, and you know it inside out, and that's your focus.
Yeah, we
correct.
actually get offered, even now, we get offered stuff in like Leeds and Liverpool and things. And we just say to people, look, we've both Tom and I have grown up here. Between us, we've lived here for what, 70 years or so. If you add my brother on, over 100 years. So we know the area off the back of our hand. So we don't really need to go anywhere else. And as you'll know, David, Manchester's booming at the moment. When you came up to see us, we were walking around the city and there's cranes everywhere. So, as a city economically, it's a great place and a great time to be here.
Yeah.
Yeah. You said 70 years. Tom only lives 25. So
No.
Thank you.
there's a big gap there. I don't know.
Do the maths.
Yeah, I'm actually
Do the maths.
55. Yeah.
You did say you're both at school together, so that answers that.
Yeah,
Okay,
that gives it
so
away.
this is, I think, we're really sort of interesting for tonight. This lease option model. There'll definitely be people who have heard of it. It happens sometimes, in resi quite a lot, and people do
Yeah.
courses, but not many people have thought about it in terms of commercial to office. Now you've got a fantastic project you've completed in this row, which we'll come back to, but just explain this lease option model in terms of how you're using it. So explain what it is, and then explain how this came about that you got control of this property, please.
So a typical lease option I'm sure many of your attendees on the call today know, but just to explain. So a lease option is essentially where you're agreeing to control a property. That's probably the best word I can use, David. So control a property without buying it, but with a clause that gives you the right, but not the obligation to buy it. So if let's say, David, you've got property, I'll say, okay, David, I'm going to rent this property from you for 500 quid a month for 10 years. And within that 10 years, I've agreed with you a deal that if I want to, I can purchase it at any time for, let's say, 300 grand. So that's in its very highest form what a lease option is. And you're absolutely right. It's quite a popular method of being able to control an asset without having the financial burden of purchasing the asset right from the get-go. And it works quite nicely sometimes with vendors. And in this particular example, where they don't want to sell the property today or they don't want to sell it at all, but they'd like somebody to come and rent it off them and kind of do what they want to do. And actually, interestingly, when we went down this rabbit hole of this, you may know, David, that most hotels in the UK, the hotel operators don't own the actual building that they're in. So they don't necessarily have a lease option model. Theirs is just a long lease where the Hilton Group, let's say, Hilton Hotels, will lease a building for 100 years or 50 years or whatever and just operate their hotel. But most people just think, oh, they must own the building, but they don't.
Yeah,
It's
correct.
quite common. So in terms of how this happened for this property, as you correctly said, we actually own and operate a building on the same road. And we approached the vendors who were looking to sell their property on the same road. And the conversation was very simple. It was, I want X price. Tom and I worked out that actually it's worth Y being a lot lower than X. And we just couldn't make it work, which I'm sure many people on this call there'll be a typical conversation they've had with a vendor where they've just, their mate down the pub's told them that the property's worth £10 when it's actually worth £5. But they just got that in their head. So we then thought, actually, how can we do a creative deal here? Because we know the road, we own and operate a building on that road. How can we create a win-win where they feel like they're winning and we feel like winning? And that's where we've obviously arrived to, where we've actually now signed a 30-year lease for the building. There is no obligation to buy, although they've said to us if we want to buy it at the right price at some point in 30 years, great. But to be honest, David, I'll probably be sitting on a beach somewhere in 30 years' time. And hopefully so will Tom, hopefully on the same beach. So we don't really have the obligation or the necessity to buy it. But what we've done is we're now controlling the building without having to pay a huge premium for somebody's, property where they think it's worth a lot more than it is. So it's kind of worked out actually quite nicely for us.
Mhm. So Tom, you've been involved in a lot of obviously selling properties, you've said, as well as the construction. I mean, is it fair
Yeah.
to say a lot of people um would well, they're in a situation where to purchase a trophy asset like this in one of the best locations in all of Manchester, John Street, it's iconic. I mean, most people just wouldn't have the money to be anywhere near this street in terms of purchase, so it's very prohibitive. Whereas the lease option
Correct.
allows you to get in
Cor-
and be involved in the street.
Exactly. And I think we touched on it before. You have to look at the angles of things, and the company that owns this property, for example, they don't need to sell. I think they had a price in mind that was probably unrealistic in the marketplace. But they don't need to sell, and they're probably happy taking the income offers for 30 years, to be honest with you. So it was just finding the angle that worked for both parties and proceeding that way.
Yeah. And in this street, either Tom or Shiro, this street's got a sort of a characteristic over the recent
Yeah,
decades of the sort of businesses that operate in the street. You want to just
yeah,
speak to that?
yeah. I'll give you a bit of a flavour. So it's the only remaining Georgian street in the city centre of Manchester. So it's quite spectacular when you walk down it. All the buildings are listed. It looks quite spectacular. Historically, it was obviously housing back in the sort of late 1800s. And then since then, it's been a combination of medical, almost like a sort of Harley Street of London. And then until recently, it was very heavily focused on barristers' chambers. There's still a number of them down there where Manchester courts are only around the corner. So they all seem to find home here over the years. And then actually gradually, slowly but surely, it's getting turned back into residential. Opposite, on the other side of the street from where we are, Mr. Gary Neville, who is one of Manchester's biggest developers, he actually lives there and owns a number of properties on the street that he's rented out. You've got the CEO of Manchester City lives next door to him, and there's somebody else next door who's a high net worth. So yeah, it's a very busy street. It's very obviously looks incredible. You see from the pictures, but it's got a nice mix of tenants as well.
Yeah. And the property you're talking about starts at that blue door.
That's right.
Correct, and then goes to
And
the
to the
right.
right. Yeah.
Yeah, so
Okay.
directly
Right.
next to us is another barrister's chambers. Yeah.
Brilliant. Okay. So what was it about this kind of lease model that was attractive?
So I think, yeah, some of the points I'll put here, the real some of the big attractions for us, not just with this property but commercial, is that when you're turning a commercial into a commercial, there's no planning required. So I don't need to tell you, David, the residential planning situation in the UK is, yeah, it's challenging, put it that way. So, for us, as developers, if we can get on site quickly and we save time, time is money, as we all are aware, when you're got investors involved or you're borrowing money. Tom's already touched on the location, we're a star location, so you can't really get a better location in the city, hence the term trophy asset when we talk about, trophy assets in. I mean, this is like kind of, almost like the Mayfair or Marylebone area of Manchester. So really, really high end area. And the really good thing about the commercial refurb is that it's less than 12 months refurbishment. So unlike some of our resi stock that we can be on site for 18 months, 12 to 18 months by the time we end to end, this is like 6 to 8 months end to end. So it's a very, very quick turnaround in terms of refurbishment. And, it means that the tills are ringing very, very quickly rather than having to wait a couple of years.
Yeah, and that's actually an important point, Shiro, because maybe I should have drawn that out of you earlier. The really one of the big advantages of this whole model is cash flow.
Yes.
Is the aim is obviously there's no capital growth involved because it's just control of an asset, but it's about cash flow,
I mean,
which
we've got a
attractive.
site right now that we bought a couple of years ago. We've refurbished it. It's now going to go on the market. And we'll do well out of it, but we won't get paid for 3 years, 3.5 years.
Yeah,
So end
yeah,
to end, you're looking at kind of 3.5 years on a traditional resi model, which is fine. It works. But with this one, it's cash in the bank pretty quick.
yeah, yeah. Super.
So
Okay, so there is the actual pictures. It was actually quite intriguing. It's a wee bit deceptive from the outside. These are massive properties, absolutely massive when you start up
Yeah.
and down all and a basement as well.
Yeah, correct. They're a bit of a TARDIS when you walk in the front door because obviously you've got these really big, lovely high ceilings, big windows. So yeah, they're pretty spectacular.
it smells like it's from the 1980s. It's got that old school kind of going into a headmaster's
Yeah.
chamber or something vibe. You can see from the carpet there and the high ceilings. It's very, very, very old school, we would say, in terms of. I mean, it looks like it's not been touched in 30 years in terms of the
Yeah.
internals, but the building itself are in very, very solid, solid conditions. Unfortunately, David, they don't build them like they used to build anymore. You sneeze and the the building falls over nowadays. But these are good, solid, Victorian properties that have stood the test of time.
yeah, and as you said, they're obviously um solid from the point of view of the work you need to do is really just cosmetic. It's refurb. It's not
Yeah,
construction work or anything like that.
exactly. That means very little structural work. Probably won't need to go back to brick in most places. Probably just go back to plaster. As you say, it's just really changing the flooring, second fix, lighting, kitchens, that kind of thing.
Very light. Like it's almost
Yeah,
like a tartan turn for those that are doing or know the BRR model. It's literally that, but without going back to brick. So it's a
yeah,
cosmetic. We would call a cosmetic refurb
yeah.
Yeah. Okay. So that's the way the property is right now.
at the moment. Yeah.
You're about to get stuck in, and there's the so over three floors.
Yeah. So
Um,
do you want to just talk through the floor plans, Tom?
Yeah, so this is a space planning model that we've put together with one of our design teams. So as you can see, it's those walls are all exactly where they are now. There's no structural work going on or anything like that. We've just split it up into different rooms. And from experience in the market, the sort of sweet spot for number of desks in the offices is tends to be between 4 and 8, around that number. So obviously all these fit quite nicely. There's a mixture of some communal areas such as kitchens, breakout areas that will be shared. Not showing on here are a number of meeting rooms. We're able to put a few meeting rooms in the basement, which a lot of tenants ask for. They get a number of credits each month, which is great, and also it's another external source of income as well because we can rent those out to general public as well for like board meetings or whatever it is they're doing with their company. So yeah, it's a nice mix. It's a good the actual room sizes are kind of perfect in the sweet spot for the market in terms of number of desks and layout. So yeah, it's a good fit.
yeah.
And you can
Yeah, one
see
of the things.
we've split the building. There's three separate buildings, just to be clear.
Yeah,
The 12, 16, and can't even count. 12, 14, and 16. So number 12 being the pink and the green building, number 14 being the beige one, and number 16 being the blue one. So the green bit, the reason that we've highlighted it in a different color, although it's part of the same building, is that we may end up renting that to a single occupant tenant separately from the rest of the building, whereby, as Tom mentioned, we're going to be going down the serviced office route. So a serviced office is essentially like a HMO. So HMO we all know is houses of multiple occupancy, where you're buying a building and chopping it up to 5, 6, 7, 10 rooms and renting the rooms to, David, Tom, Shiro, all individual tenants. It's the same model, just in offices. So each of those rooms there, you can see, let's say one of the rooms has got 6 desks. That will be rented, let's say, David, to your company where you've got 4 or 5 members of staff. You pay us a monthly fee every month. But the difference between this and traditional offices is all the bills are included like a HMO. So Tom and I pay the electricity, we pay the internet. But for you as a business owner, you just have one fixed cost a month. All
Yeah.
the rates, all the bills. There's a receptionist there full time, collect your post, greet your clients, greet your customers. It's all in. So from a new business point of view, it's great because you've got one payment once a month, fixed amount. Great. I'm happy with that. Obviously, we charge a premium because of our product is a high end product. But it just means that if you're starting a business or you've got a business, you've just got one payment and you can kind of budget then.
Yeah, which makes perfect sense. And I should have actually highlighted this actually is three properties all joined together. So
All
it's
done together, yeah,
yeah.
it's a big lump of commercial space for
absolutely.
offices, which is great. So yeah, so again, remind everyone that's how it looks right now.
Yeah. And
Layout,
also,
but
sorry, just one more point, if I may. We've also got 22 car parking spaces as well, we forgot to mention. So, car parking, as you'll be aware, in any major city is and can be an absolute nightmare. We're very,
yeah,
very lucky that we've got 22 car parking spaces that we can either rent to the individual businesses or, which we've actually done recently, is while we're starting the project, we've actually rented it to some external clients. So they're now paying us 250 to 300 quid a month per space. It's great.
more cash flow, more
As I
cash
said,
flow.
we haven't even started the project. We've got cash coming in already. What I mean, that's great.
Yeah,
Yeah.
yeah, no,
Yeah.
that's hard to beat. Yeah, so as I said, there's where it is now. Now, what we can show is just what 25, 30 yards up the street. this is a project that you've already completed and it's been running for what, is it nearly 2.5, 3 years?
Two
This
and a
was
half.
running.
Two and a half.
Yeah.
Yeah. Yeah. I mean, you mentioned high-end premium. Your model is very much that, and yeah, I'm familiar with the WeWork. I'm familiar. I'm a member of Regis, so I'm familiar with that co-working space. But certainly, you've taken a lot of care in your design, in your finish, and the quality. Um, just maybe speak to that decision and how the market has responded to that type of product.
So there's two reasons really. We try to sit into, as you mentioned before, there's other competitors in Manchester such as WeWork, as Regis, who kind of sit at the lower end of the market where you can probably pick up a desk rate of say 300 pound a desk, something like that. Because of the location we are and the type of tenants we try to attract, we went for the higher end of the market where we sit. We're sort of over 400 pound a desk. But what's that done is it attracted a certain caliber of tenants. So within this project that we finished, we've got wealth management companies, we've got private equity companies, we've got a private healthcare company, and actually another property company as well. So it's that caliber of tenant. It's not sort of the recruiters of the world or something a little bit lower down where it's a certain type of people coming into the building, certain type of clients coming into the building. So that has to match the fit out. And even though this looks fantastic on the images, we didn't go completely crazy here, did we, sure? We didn't completely splash
Yeah.
and break the bank. It's just been designed well, and it's certain touches. For example, the kitchen itself is a Howden's kitchen, but it's just got a nice worktop on it, quartz worktop with nice LED lighting. The flooring's particularly special. That's the original flooring from sort of 1800s that somebody covered up and we found. So it's just little touches like that make you stand out.
Yeah, I thought that was cool. I was going to draw attention to that. So down at the bottom there, bottom
Yeah.
center, that was originally covered in, was it carpet or tiles or what was
White,
over it?
white,
Tiles.
horrible,
Yeah.
horrible tiles.
Horrific.
Yeah,
Horrific.
and then when you lifted the tiles, you found the original floor from roughly when?
Or the
80,
over.
these were built 1880, I think these were built, something like
Yeah.
that. So
I just think that's
yeah,
phenomenal.
it's
So
crazy.
now
You,
you've
you
got the
can
1880
you,
floor.
you can imagine the amount of people that have walked over the floor in their lifetime,
Yeah.
right?
Yeah.
Yeah, good quality. That's what you call character in a building.
Absolutely.
Yeah.
And that's the
Onsen,
thing, David.
onsen.
People will pay for that, and with all the modern stuff that we've got, and you just need to look in Manchester. There's glass buildings going up literally everywhere. It's nice to actually have a characterful Victorian old school
Yeah,
building,
yeah,
and some people don't like it, but some people love it.
Yeah.
yeah.
Exactly.
No, that's fair. Okay, so now getting down to brass tacks, the money, the money, the money, the money. So obviously the the big one is normally the most expensive part is the purchase, but in this model you don't have it. So just give an idea of what costs do exist,
Sure.
and then an idea of sort of returns that you'd be expected to generate.
Sure. So the total capex or capital expenditure that we're looking on spending on the three buildings, just to be very clear, it's not per building, but over the three buildings, is about £1 million. So you can see there from my table at the top, the table, the total with the green on there. You can see the majority of that, 83.11% of that budget is the actual development. So that's the furniture, the flooring, the decoration, the M&E, etc. And then we've got some of the peripheral costs, legal costs, etc., etc. Just an interesting point. When you sign a lease over 7 years, I think you actually have to pay stamp duty. So a lot of people don't know this. So that's why that we've got a chunky legal cost in there. So it's about £1 million. And then the table at the bottom is essentially very high level showing that we're looking at going out to the market at between 400 to 425 pound per desk per month. It's also worth noting that our building number 22, the average desk rate we're getting, David, is about 470 a desk. So we're being pretty pessimistic when it comes to the appraisal on what we think we are able to achieve on a per desk basis. So the actual total revenue, which is not showing on here, should be just over £1 million a year. So if you think about this, it's £1 million in with I think it's just shy of 1.1 million a year out. And what we're essentially offering, as a kind of a profit share is that once that £1 million has been paid back over 5 years, if you look at that table at the bottom, what we're essentially saying is that it's kind of a 50-50 profit split with the investor up to year 5. and every year we pay back essentially 20% of the capital. So 20% of the £1 million is paid back every year out of the revenue that we're generating. And the investors get a 50% net profit share. So if you see the column where it says payback, so that payback is essentially 200K per year over 5 years. And then the 50-50 profit split is, you can see there, 146K a year over 5 years. And then as soon as they've got their money back, the investors have got their £1 million, or whatever the pro rata amount is. That then drops to an 80-20 profit split, where they'll essentially get around 100K in perpetuity for the next 25 years. Maybe they will be sitting on a beach with us at that rate, also in a few years' time. So money back in kind of circa 5 years' time, and then a share of the profits for the next 25 years as a thank you to helping us and supporting us in this particular model. So I hope that's kind of explained it.
Hmm. Yeah. Did you
Tom,
want to
you
comment there, Tom?
No, sorry, I clicked the wrong button. Apologize.
No, that's not no problem at all. Just don't do that on a live auction. If you're ever on a live auction, by
Yeah,
clicking the
by
wrong button,
accident.
you'll have bought a 1.3 million property. But yeah, what's interesting, I'm sure, and we discussed this when we were over, just in terms of course, for people looking to JV with developers or JV with people involved in property, there's loads of different options. I think the market at the minute, and funny, I called in with a friend, those who see me on LinkedIn can see I called in with a company that would be well known in this space in terms of fundraising through high net worth individuals. Um, you can see that on my LinkedIn profile if you want. And the whole conversation was around how many development projects had gone wrong. And whenever I had a crowdfunding company, FCA authorized, again, the challenge of developers that things just go wrong. Sometimes it's their fault. Very often it's not their fault. It's just circumstances, interest rates, costs, material costs, whatever. One thing about this type of model, I think that sort of gets my attention is that there isn't the same risk as ground up development.
No.
There's a lot less moving parts, a lot less can go wrong. Still risk, of course there is, but is that one of the things that attracts you to this type of model?
Yeah, absolutely. And if we just talk about the risks, so as you said, we're not doing a ground up development. The building is already there. And we all know that in life everything has a price, right? Everything has a price. So our kind of big risk here is, let's say we're not able to rent the rooms at the price that we want. We just lower the price. We'll still get it rented and it's still producing a fantastic cash flow. So it's not like your traditional resi model where you're waiting on Mr. Smith to walk through the door to buy your 300 grand apartment. It's a much lower cash value of what we're asking. Plus, like I said, we are able to control the rent, and because there's so much fat in the deal, even if we have to drop the rent slightly just to get the punters through the door, it's a much lower risk level than trying to reduce a 300 grand flat to 270 grand to then be able to sell it. You've just knocked 30 grand. You've knocked 10% off your, essentially half your profit's gone, basically. For that adjustment that you've had to make.
Yeah. Yeah, no, that's a fair point. Okay, well, there's the financials. Obviously, we'll send this out obviously to the attendees. So, yeah, we're having fun tonight, but time is definitely not on our side. So just maybe speak to the one up the road a little bit, but before we wrap up. So, this was literally just up the road. Do you want to just very very quickly give an idea of this one? This now you did buy, I think from memory.
Yeah. Tom, do you want to?
Yeah, as I said, it was a slightly different model. We purchased this with a sort of traditional development strategy. So this was bought back in 2022, off market. It'd been struggling. They'd had a buyer in legals for a while. Who wasn't performing, and we got a phone call from an agent that we knew who said, yeah, it's available. So we pressed ahead. And it was a similar sort of fit out to what you've just seen on 12 to 16. Needed a cosmetic refurb, which we did within 12 months. And yeah, from then it's been income producing ever since.
Cool.
And we're
Okay.
award winning as well. We always forget to say that,
We
David.
always do, yeah. We are, yeah.
Yeah.
We always forget that.
We won an award at the International Property Awards last year for the best commercial development in the UK, which we were very, very proud of. Tom and I
Yeah.
are not really into that kind of thing, but Shonik, who's our third co-founder, my brother, was like, "Oh, come on, guys, we've got to do this. We've poured our heart, blood, sweat, and tears into this project, and yeah, we won, which is always nice."
Yeah.
Yeah,
And there may even be a slide on that in a minute. I'm trying to remember, but
might be.
certainly there's some of the stats. In terms of your purchase and stuff, and the
Yeah,
information's there that can be tracked through. But certainly, you pick that up, and that has given you the experience,
yeah,
which I think is so important when it comes to your current project. Because if it was just your first one in that space, it's like, it's great to have experience elsewhere, but you've actually effectively done this already, 50 yards up the street, and you're just
exactly.
replicating a successful project. So
We are, yeah. Yeah, and as with any development, we learned some lessons from that as well. So those lessons will be put into practice on
yeah.
this
The
project
next
as well.
one.
So yeah,
Is that those white tiles here in the middle there, isn't it?
Yeah, I was just
yeah.
about to say there's those
Uh,
horrible, horrible white tiles you're seeing there. So
wow.
yeah, and boy, I'm glad that we took them up. We were actually going to put some of the tiles down, but the contractor rang us one day and he was like, "You need to get down to St. John's now because we've just uncovered these beautiful old." And it was thick. There was like this much dust, like a thick dust
Yeah.
over
I
it.
think I think there was two layers from memory, maybe.
Yeah,
I
and
think
they had
someone had
to.
gone over another layer of TSR. It's just mad.
That's
Yeah, I
mad.
don't know why they did that, but anyway, there you
Yeah.
go.
No, that's okay. Well, if anyone has any questions, get it in the Q&A now. So we're about to wrap up here in a few minutes. So if you do have any particular questions you want to ask, or even comments, stick into the Q&A. But again, that's just some examples of the previous sort of
Yeah, that gives an
solutions
idea of
covered.
the 12 to 16, how it is a cosmetic refurb. As you can see, we've just literally pulled up the floors, gone back to plaster, and yeah, use that as a blank canvas basically.
Yeah, which is cool. And there's right through then. Excellent.
Yeah, so you
And
can
then
see
we're
those.
back to
Then you're back to yeah. So we actually managed to do the refurb in about six,
But yeah, six, seven
7 months.
months.
Yeah,
Yeah,
7 months. We started in November 22, finished in July 23. So yes, yeah, if you count Christmas, it was 8 months. But yeah, seven months. So it was pretty quick, considering.
yeah, fantastic. And there's again just some examples. So yeah,
Yeah,
and the financials on that one, I'll say this is already operating.
yeah.
Um, so it does give an example of
Yeah, so we spent 4.4, call it for the purposes of the conversation, and we had it valued at over 7 million quid. So, we did okay on it, and it's generating nearly 600K a year in revenue. So we've got a proof of concept, you would say, literally 10 doors down of what works. And as Tom said, we've managed to learn a few bits from this one that we're obviously going to implement to the new one as well.
yeah, excellent. So the rental income you're saying they're generating around about just shy of 600,000.
Yeah, on number
That's it.
22. That's right. Yeah.
Yeah, yeah.
yeah,
So as I said, it's the
Fantastic.
average is about £470 per desk.
Okay,
yeah.
Yeah.
okay,
And this one we budgeted it at 425 a desk. So like I said, we've been slightly pessimistic.
okay. Yeah, but that's good. But the fact you've got tangible, you know, financials for a number
Odds.
of
Yeah,
years on exactly the same product, which is good. And there you are. Is this the award?
That's the award,
that's
yeah.
the
We,
words. Yeah,
There you
we
are.
also had a full, I think it was a 10-page spread at Your Property Network magazine last year. They did a big spread and an article about it. And there's a YouTube clip somewhere, interview of me talking a bit more detail about the building as well.
Yeah, brilliant. Okay. Well, so wrapping up then, just by way of summary. So this is your current live project.
Yeah.
Everyone on the webinar, for those sort of Eagle financial guys and our compliance guys going, "Ah, there's talk there of investment and there was no risk warnings." Everyone who's invited on the call tonight are high net worth or sophisticated investors. So financial promotions doesn't apply in this scenario. But certainly the guys are open to a conversation. JV partners, you tend to only really work with private investors. You don't really go for first charge lending or anything. You just tend to either put your own money in, your own sources of funding, um, or you bring on periodically some private investors to work with. And you've got obviously multiple projects happening across Manchester.
Absolutely, yeah. We always tend to find that when we deal with private investors, they become more like business partners rather than, somebody that's, let's say, sat in a big London office somewhere just giving us the funds. So we like to actually create a relationship and establish a relationship with our investors so that, we can do more projects together once this one has finished. So yeah, it's really important to us that we are able to have that one-to-one relationship with our investors rather than just being, a customer of a family office or a fund or something like that.
Yeah, brilliant. Okay, so reminder then for anyone who can make it. I know it'll be a phenomenal sort of 4 hours. Seeing you're going to have a look, guys, at some other projects that you've
Yep.
done, some other ones that are ongoing.
Yeah.
You've got some like we're on the top floor. I think it was 7 or 8 floors of another one that you have in Manchester. It was phenomenal views. So you're going to be able to show the people who come on the site visit
Yep.
a range of properties, and then get a wee bit of food and talk through this one specifically. So really special opportunity to do a sort of an educational site visit, to get to know Tom and Shiro better, see their model, see them eyeball to eyeball rather than just on Zoom. So that is there for Saturday, the 22nd of November, 11 a.m. to 2 p.m. Transport links obviously are really easy into Manchester, either by flight or by train or by car. If car parking spaces were needed,
Yeah.
actually, is
Yeah,
that
yeah, we've got plenty of parking because it's on the weekend. Most of the tenants won't be there, so we've got plenty of car parking if anybody wants to come. It's very convenient, the train's a couple of hours to London, and we're right in the middle of Manchester, so there's plenty of transport links available.
yeah, fantastic. So do a quick screen grab now if you want that. Obviously, you can reach out to me directly as well, but you can get on there and book that. I think it was five booked on it already. We only really went firm there on it, I think about a week ago. So yeah, we're going to definitely cap it. I think we talked about 10,
Yeah, we've
11.
got them.
Well,
Yeah.
no more than that. It's going to be capped. So to have it a nice group for moving around. So hopefully you have a time to grab that there. So I don't think we're going to have time for any other questions now. What I suggest you do is if you want to reach out to me, by WhatsApp or drop an email to me, any questions you have, I'll get it over to Shiro and Tom, and we'll be able to get those questions answered. But I think we've had a really good sort of run through there. I think it's been very productive, really good level of detail. So again, for anyone who just doesn't happen to have my details, there it is on the screen. And I'll give both of you sort of 15 seconds each to finish up.
Yeah, no, thank you very much for allowing us on the call, David. And I always say, as a developer, our job, our responsibility is to add value to buildings and projects. And I think in this particular case, we've really squeezed the value out the way that we've structured the deal. And obviously, it's, as I mentioned, it's always nice to have cash ringing through the tills immediately. As you said, cash is not king, cash flow is king.
Oh,
Yeah,
oh, where do
exactly.
we?
Yeah,
I like that.
I'd just like to touch on that. I think in particular, this project, as you say, we can get on site quickly, we can get the refurb done quickly, and as you say, get the till ringing, as Shiro said before, as quickly as possible, which is great.
Okay,
Which it's already
fantastic.
started ringing actually. In
Yeah,
a
true,
short
very
time,
true.
it's already ringing.
With the
Yeah.
car for yeah, but you're not going to charge those on the site visit for parking on
No,
Saturday the
no, that'll be
22nd.
free.
They get it
No,
free.
absolutely. They get it free. Yeah, absolutely.
Brilliant.
Absolutely.
Well, look, guys, thank you very much for taking time out on a midweek evening.
No
Thanks everyone
problem.
for joining us. And as usual, I'll send the recording out to everyone that's attended, and you'll be able to go through it again in more time. But listen, guys, Tom, Shiro, thank you very much. Appreciate that,
No problem.
and we'll be in touch.
Cheers.
All right.
Good evening,
Thank you very
Bye
much,
everyone.
bye.
David.
Bye bye. Bye
Enjoy
bye.
the